Joining us on the show to talk about the way forward for the Indian equity markets is Sandeepa Arora, the president of IIFL CAP, and she heads the US sales for IIFL as well. She's back from New York for a holiday in Bombay now, so let's welcome her. Sandeepa, hi, good afternoon, and thanks for joining us. There's a very interesting conference that you guys are having, and we're featuring a lot of high-profile names from that conference. But I want to understand from you, since you head the US sales and you have a good pulse check on what the foreigners are thinking about the Indian markets, are foreign funds or foreign investors bullish on India in 2014? Because that's pretty much the sense that we've got in the last couple of days.
Sonia, I think US investors at least are much more cautious. I wouldn't say very bullish, but they're cautious because there is an event that's coming up and it's sort of tough to take a view on the event per se. But obviously people are taking a more neutral stance as of right now, and based on the outcome of that event, I think they'll take fresh incremental calls on India. So I wouldn't put it as very bullish from investor perspective. Our view is slightly different, but I think they're not negative either, which is a good thing.
Sandeepa,
so more neutral than anything else.
Sandeepa, I know that the event you're talking about is the election. I know we can't predict the outcome of the election, but have they kind of taken position on how they will act in the event that the event turns out in three different ways? One is with if you have the same government come back to power, if a third front should come back to power, or if the NDA should come back to power. I'm not asking you for opinions. I'm just asking you for how will each outcome affect sentiment? It's not your view I'm asking for. I'm asking you for the view of your investors.
I know. Fair enough. I think the first two options obviously are perceived as negative. There is a huge anti-Congress wave even amongst the mindset of the investors given the track record over the last several years. So clearly I think that's not an option from the investors' perspective. So I think the most bullish stance would be the NDA government coming into power, because that looks more to in favor of reforms, and the kind of things investors expect is obviously expected from that particular government. So I think that is very clear.
How much of that again would be a how much of that has been priced into the equity markets so far? Has anything of that been priced in, or has a lot of that been priced in?
No, I don't think so. In fact, I think there was a brief period of time, there was a lot of, worry in terms of what AAP could do to that, to those dynamics, because people were worried that, that would spoil the party for the NDA government. So there was a bit of worry that crept in. Of course, politics, as we know, keeps changing. It's a very dynamic situation. We still have some time to go. So clearly things are looking more and more clearer as we go forward. So the most optimistic scenario from the investors' perspective is the NDA government coming to power, and I think if that happens, people will be very bullish.
Well, you said that investors are taking a neutral stand on India, which is a good thing. At least it's not a negative stand. So that's good. But how are US investors looking at the India versus China story? Because in the past two or 3 weeks, we've got the opinion that because of the problems in China, now foreign investors are taking some amount of money out of China and putting it into markets like India. Are you getting a sense of that as well?
I think so. I think that's again relatively a recent phenomenon. The numbers coming from China are clearly worrying. India is clearly in a much stronger position. The fact that we are now more stable on currency, our current account deficit, all of those things for us are now much more stable. The worries that we had probably about 6 months to a year ago are now sort of gone and behind us, and there are signs of cyclical recovery in India. So I think India on the balance is far more positive than China. So that I think is the correct view.
Okay. So in terms of a portfolio stance, the same old boring story of IT and pharma being on the upside and cyclicals being on the back burner, we've heard that for such a long time. Do you think that trend could change, Sandeepa, if a stable government comes to power and if the reform momentum improves? Will that trend change? And to capitalize on that trend, would you increase your exposure to some of the cyclical names, i.e. capital goods, banks maybe?
So I'm going to split that into two. One is with the government, new government coming in and what they eventually do, which is unknown, and one is what we are seeing as of today, even without that happening. So I think, as I just mentioned, clearly we are seeing signs of, some sort of an uptick. India, if you look at it for the last 6 years, has continuously seen, downgrades in earnings. We've been in a cyclical downturn since, barring that one uptick in 2010, we've actually been seeing a downturn since 2007. So I don't think that India has seen an uptick at all. So clearly the cyclicals today are suggesting that, that probably has bottomed out and we would from here see better numbers coming through. So I think, Nifty could see some upgrade, which so far was in a downgrade sort of a mode. So even without a new government coming in, I think there are clear signs that things are on the balance improving. I think that will be led by the capex cycle picking up. Again, that's cyclical and it's showing signs of turnaround. For the first time, we've seen numbers coming from the likes of Crompton and Voltas, which are, positive after many, many quarters. So there are early signs. So growth, clearly, the numbers that we were seeing, that has bottomed out, and I think we'll move from sub 5% to closer to 6%. So I think, on the balance, I'm far more positive. And of course, if that's backed by a government which is pro-reform and takes a lot of measures towards that direction, I would be a lot more positive. So we are positive, but we'd be a lot more positive if, the correct government is in place.
What's the sense you're getting on the extent of the taper, Sandeepa, and how will that affect flows into emerging markets and specifically into India? Will India be a little better off than the other emerging markets?
I would think so. Versus the other emerging markets, as I said, that India is now seeing a lot of improvement. Export-oriented sectors will continue to do well, which is IT and pharma, as she said. But I think India today, is looking, or rather emerging as a little bit stronger than the rest of the emerging markets. I would be more bullish on India than other emerging markets, and I think currency is reflecting that. Over the last 6 months, we've seen the Indian currency outperform the others, so that's clearly being reflected.
Okay, one final question then from Maya and Sandeepa before we let you go. I know it's a $1 million question, but do you see the markets break out into a new high before the elections this year?
Tough one. Your guess would be as good as mine. I would definitely want to see that happen. I would put more probability of that happening. Probability would be in favor of a breakout, given that market's been holding so well despite so much negativity that has been perceived. I would give it a lot more probability, but obviously I couldn't be certain about that. But as I said, I stay bullish, and I would be more extremely bullish if a favorable government comes in.
All right, Sandeepa Arora, as always, thank you for joining us. You have